Inflation numbers are coming in quite a bit different. How is this going to affect the market? Has the bottom actually occurred? Today we'll break it down. I want to do one thing, and that is to thank our partner and our sponsor today, and that is iTrust Capital. This is where you guys can get going on your own crypto IRA. And the nice thing about iTrust is, first of all, it's the time of year to be looking at IRAs, being able to capitalize on those tax benefits. The other thing is this is fully self-directed, so you guys get a chance to fully manage your portfolio in there. There's no monthly fee. You only work on the trades you're making. You can get into precious metals with gold and silver. It's very flexible, and they have a ton of features in here, including premium custody. So check out iTrust Capital. It is a great place to start out there. Just use our link. It's going to give you a $100 funding reward just to get going and start your journey. Let's go over to our trader today, and that, of course, is Mr. Tim Warren, coming in from Tim Warren Trades over on YouTube. If you guys haven't visited his channel, jump right there. You can go see Tim on YouTube, and he's got a $10,000 crypto portfolio in there featured from 4 months ago. I'm going to ask you a question about that, Tim, today. Would you still use the same portfolio?
Yeah, outdated video there. I'll tell you right now, every coin in that video I still like. Does that mean that you're going to turn that $10,000? Is that $10,000 still worth $10,000? No, it is not.
No, it is not.
Is it still a good long-term hold, those picks? I would think so, but clearly things have changed since that video was made.
I like it. All right, well, let's get into the news here, because this is the one that is most perplexing to me. And I even think Kobe Isi hit it right here. Absolutely insane. Inflation in the U.S. just unexpectedly posted one of the largest monthly declines since 2023. We saw a 10 basis point increase in inflation, which was what it was expected. It actually fell by 40 basis points. This puts core CPI in the U.S. at its lowest level since March of 2021. We know what that was, and that was really an era in which we don't want to revisit. So I don't know if, first of all, I never trust the inflation data anyway, so I'm one of those that always doubts the data coming in. But the narrative that it puts out into the market is completely different than what we've been seeing overall. Do you think this signals anything at all, Tim, going forward if you were trading in the market today?
Yeah, I mean, clearly it's bullish. It's a depiction, following up on news we got the other day. Unemployment hit the highest level we've seen in how long?
Yep.
Now inflation is the lowest we've seen since what you just said there, March of 2021. What do you do with that information? You say we have an unemployment issue, not an inflation issue. What does that equal? More quantitative easing in the form of more rate cuts. I think what we're watching right now in the last Fed meeting, the dot plot that was revealed, projecting what the current Fed members believe 2026 would look like, their average is predicting that, or they're expecting to only have to cut rates one more time in 2026. I believe I saw that futures is still predicting that they'll cut twice. Either way, I think a lot of Americans think that they should cut even more than that. And in an ecosystem where inflation continues to drop and unemployment continues to go to the upside, that is a recipe for more and more rate cuts, more liquidity, more money printing. And what happens when that happens? Risk on assets like cryptocurrency go to the upside. So we still see this whole recipe that we've been talking about for a long time. The signs of a bullish 2026 are still there. And yet, I'm sure we're going to discuss in today's show, crypto prices keep dropping. Why is that? Well, I'll answer it as best I can here in a second.
Okay. All right. Two things to kind of consider here, because I think a lot of people were really disarmed by what that report did. And Truflation put out a note on this. Their item number one was the one I want you to pay attention to. As per the BLS, they started to collect November data on the 14th of November and attempted to collect data for the entire month, which means some data is missing. So we're going to get a revision. But the fact that they were able to put out this is, I think, the bigger question. Now, tariffs are still a big issue, Tim. I want to play a clip for you and then get your opinion. Take a look.
Yeah, it's frustrating because they haven't even posted the information that I would need to really parse all of this, given the confusing way they've displayed the information. But the important number is the year-over-year change in the prices of core goods. And that was 1.4%. And that may not sound like a lot, but this is a category that in normal times has negative inflation all the time. And this is where we're seeing tariffs. I don't think we've seen the last of the tariff effect by any stretch. I think we're only seeing a modest part of it so far for a whole bunch of reasons. One of which is that firms hoarded inventory ahead of the tariffs and are probably still working through that. And I am very, very puzzled by market expectations. Markets right now are expecting the next Fed chair put in place by President Trump to cut by a sum total of 40 basis points. My guess is if that came true, President Trump would be incredibly disappointed in his Fed chair pick. So I think we're in for lower interest rates, higher inflation.
All right, lower interest rates, higher inflation. She was, of course, hitting on core, which is an issue. She is exactly right. Normally that does go negative. But a lot of this may be coming in from energy. Energy is another big factor in inflation. This, of course, just the U.S. Retail gas prices, which have been plummeting. What's price of gas in your neck of the woods?
I think I just bought some the other day for $2.55 or something.
This is crazy to see this. December 15th. This is the national average at $3 right now. So maybe that is part of this number that is coming in. I don't know if this is a precursor into it, but it definitely puts a perplexing consideration of where this market is going. Crypto made this year feel worse than I think what we've seen in some of the biggest issues out there: COVID, FTX, Luna. I mean, if you look at where Bitcoin is on the year, it is a measly performance compared to almost everything else, S&P, gold, you name it. When you look at the Bitcoin chart right now, Tim, tell me something good. Is there anything in there that you can say, here is a chart that's going to show me something?
I love how we kind of left it off there. Let's look at something that's technically negative, but when you break it down, it should be longer term positive. So I'll go to my screen here. Let me zoom out a little bit, or zoom out and show you the broader time frame. This is a 12-month chart. That's why I'm zooming out so far, because each one of these candles right now I'm showing you guys is 12 months of price action. And if you're a 4-year cycle person, I understand a lot of people are still heavily convicted about 4-year cycles. This is supposed to be majorly bullish. And on my chart, I like to mark my candles as white bullish, blue bearish. This should be a very decent sized white candle in 2025. This is 2021. And to be fair, we had a nice long wick to the upside, but still the candle body is very, very bullish. If you go back further, actually, let me go to a different chart that gives me longer time periods here. This is 2017. Right, the top of that 4-year cycle. And you go back before that, this is 2013. So if you're a 4-year cyclist, why is this candle blue? This is one of my biggest reasons, Paul, for continuing to believe, despite the pullback along with the right time frame of October being the top, this was a very disappointing year, not just for Bitcoin. I mean, Ethereum's in the blue. Don't even get me started on what altcoins are going to look like Chainlink and Uniswap and Ondo didn't even have 4 years. Let's look at Cardano over here. Nasty years that, according to the 4-year cycle, were supposed to be very, very bullish. So on some time frame, or on some way of thinking, that actually is a sign that the 4-year cycle is dead on how negative 2025 was. And I've said this a lot, Paul. I think I've said on your channel before. Even the 4-year cycle theory, whether you believe in it because of its relatability to the halving cycle or not, you have to at least admit, well, how coincidental was it that in the years 2021, 2017, 2013, these were years of economic boom, years of quantitative easing, years of rates being cut by the Fed, and the following years, 2014, 2018, 2022, were years of quantitative tightening and rate hikes. Well, we just went through an entire 2025 year of quantitative tightening, increased rates. They weren't cutting the rates. And now all signs of we're cutting rates going into the end of the year. We've ended quantitative tightening. We're probably going to get into official quantitative easing in 2026. Now you're seeing a flipperoo where 2026 is going to have a lot more economic similarities to 2021 and 2017 versus 25 was really more like the bear market year of 22 and 2018 and 2014.
Yeah. Well, I think that there is, when you look at CryptoX, people are very negative right now in general, and for rightly so. I mean, they've lived through, just like Ash Crypto just mentioned,
I understand,
a pretty crappy year for crypto in general. But I think it is the expectation, to your point, that this was supposed to be that 4-year cycle year that really kind of took crypto to the next level. I think, the likes of Michael Saylor have talked about this, but at the same time, Data Dash has been on here many times. He talks about 2026 being the year to watch. And it sounds to me like with this cycle pivoting out, and if you've listened to Raoul Pal, Raoul Pal, I should say.
Yeah.
Raoul, when he was on our show, he kind of talked about this elongation that is happening in the business cycle of the markets, and that does line up very similarly. The question, of course, is still going to be, how does inflation play into this? The other thing that will be a factor here going forward is these crypto bills. And I'm also starting to flip on this. As of this morning, what seems to be happening is that we're starting to see the crypto contingency playing a card with Tim Scott and a lot of our congresspeople there in D.C. to try to resurrect what is going to be the Clarity Act and try to save it, in essence, from the banks. I want to play a clip for you, and we'll talk about that.
We're making progress, but we're not, it's clear to me anyway, that we're not there yet.
That's Senator John Kennedy. He's a member of the Banking Committee that initially hoped to mark up the bill this month, but that has now been pushed back yet again. Issues remained, and a tentative vote on the bill that lawmakers hope to take this month could be going now until January. Remaining issues include whether top government officials like President Trump and his family should be able to profit from crypto ventures while they are in office. Another ongoing debate is to what degree decentralized finance should be regulated. And there's also a battle brewing between banks and crypto over interest payments. Now, stablecoin issuers, they are banned from paying interest to customers, but they can pay rewards that look a lot like interest, which banks argue is too similar.
All right, so we know all the the issues there, but it does pose, as of this morning, and fortunately I get a chance to talk to a lot of the guys in D.C. We'll be at the D.C. Blockchain Summit in January, talking with a lot of these lawmakers. But point being is that it appears that we've got a little bit more looseness after Ripple, Coinbase, A16Z all basically converged on DC to try to line out some of these things. If we get a market structure in January, where would you put that in terms of the bullish scale on a 1 to 10 for crypto in general?
Yeah, I think that event would look kind of similarly. I think charts would look kind of similar to what we saw maybe with Bitcoin ETFs. Everyone's going to remember right there at the end of 2023, early 2024, when that came out, we started a boom. I think you're going to look at that. I think you're going to look at times like when, at the time, whether people agree with it now or not, 2025 was a bad year. Everyone thought 2025 was going to be great because Donald Trump was coming into office and he was supposed to be the greatest crypto president ever. Didn't work out as some people thought. But if you guys remember, when it was announced he was officially the next president of the United States in November, markets took off once again. So what I would say is I think another thing would happen like that. I'll show you even on the charts to kind of show people what price looks like leading into these events I just mentioned. You got to go all the way back here, like I said, into late 2023. Bitcoin had already bottomed, obviously, in the bear market. Let me grab my stool here. This was the bottom right here. Clearly, Bitcoin had a nice surge as things started going into the bull market. But we had this period of time of consolidation, not really a major pullback. I think Bitcoin didn't even quite pull back 30%. But after a long period of time, we're talking about between April all the way until October of 23, there's a long lull of boring nothingness happening in the world of Bitcoin and crypto. And then guess what happens? The rumors and the reality of the ETF started to come out, and Bitcoin and crypto started to take off, right? And while there was a little hiccup when the ETF went live, the boom continued all the way until March of 24. Well, all of a sudden, we hit a new all-time high before the Havy event. It was crazy. Crypto's going berserk. And then we entered this very long consolidated period, right? Some people are going to say that was even a bull flag pattern, but a very long consolidated period where we're waiting. Hey, is the Japanese carry trade? By the way, we're talking about that again. Even tonight is a big deal. Japanese carry trade kind of scared markets here a little bit. But like I said, we start to hear, all right, looks like Donald Trump's going to be president. Markets start to move back to the upside. It becomes official. Everything takes off. Donald Trump becomes president. We think it's supposed to be very good. We get this long consolidated, nothing's happening. And then what starts going into play? They start to give the rumors and rumbling mills of quantitative easing, of the Clarity Act. Although I think it had a different name back then.
Well,
Markets
Genius went through.
The upside.
Genius went through. Yeah.
Yeah, it was a Genius Act at that point. But now we've gone through another pullback, consolidation, boring period. Everyone thinks, I mean, by the way, bull market dead. If anyone was here in April 25, the word on the street was the bull market's dead. If anyone was here in July of 24, the bull market was dead. If anyone was here back in September, August area of 23, the bull market was dead. So we're at another place right now where the bull market is dead. That's the word on the street. But we're about to see something massive come out. And like I've just showed you, we've seen this in this, don't call it the Fourier cycle, call it the every couple of months cycle, where you wait for the highly anticipated news, you draw down into that news, and then when it launches, explosions and fireworks happen to the upside.
Okay, with that being said, I want to bring something up on the chart that the team we've been analyzing here. This is just the MACD on where the markets were, and this goes back here into February, 22. We saw basically which was the beginning of the bear market. Market comes out, but now here we've got basically 2 months right now, Tim, that looks as though we might be going negative again. So is this a fake out? Because we have not seen that before in these kind of market cycles, to see a MACD respond this way, specifically on Bitcoin.
Yeah, it's going to be too early to call that for certain. Here's what I won't even try to deny. Every time the monthly chart has gone bearish when it comes to Bitcoin, we start a bear market, right? This is one of the biggest rumblings of people who still believe in the Fourier cycle. We lost the 50-day weekly or the 50 weekly moving average. That's another big sign. Every time we lose that, we go into a bear market. We lost the monthly bullish MACD. We've crossed bearish. That's a major sign. But when you look at the stock market, when you look at the markets that these institutional players control, there's actually several fake outs when it comes to the monthly MACD. And at some point, we've all known this, at some point, Bitcoin and crypto will mature to a similar type of movements of the stock market. And that's a great indication right there. Yeah, you're looking at it. I think that's the S&P 500.
Yep, S&P
that's what I was referencing in my head.
That was the one in May.
So if you're an institutional buyer, you ignored that. And that actually marked the bottom. And what we're watching right now in the world of manipulation, it is clear that the institutions are manipulating Bitcoin price. So we're playing a different game than we've ever played before. By no means am I saying that this promises that we're going to go into a major bull market. I don't think it's smart to ignore the Bitcoin historical precedents, but it's also not smart to act like this is the same chart, the same market we've ever been in before. The amount of differences between the last 12 to 24 months between its relation to the Fourier cycle in the past, it's monumental how different we are. So it's not clear cut right now to make a clear depiction either way. You kind of have to go with you have to go with your gut of what you truly believe in. And what I'm watching right now, I think the biggest thing to watch is, what do risk on assets? Crypto's a risk on asset class. What do risk on asset classes do during periods of quantitative easing? It is overwhelming. They go to the upside. That to me is the biggest thing to tie to the past.
All right, so a couple of things, even though that does have a correlation to historical patterns, which, maybe not, many people would say, well, could that one break? Because if we're seeing one historical patterns breaking now with Bitcoin. All right, here's Bitwise. This, of course, Matt Hogan talking about this 2026 prediction. Tom Lee has the same one, which is that Bitcoin's going to break the 4-year cycle. We'll get a new all-time high. Forces like Bitcoin halving, interest rates, crypto booms, busts, fueled by leverage, weaker in the past cycles. Institutions now, obviously, Citi, Morgan, Wells, everybody moving in. This is the big one that he goes in on it. Now, I want to go to a clip that gets into Tom Lee's predictions, also looming into January, which may be in alignment with everything we're talking about. Listen in.
Crypto's had a rough year. It was actually having a great year until October 10th. Then any event in history, the most recent one before this would have been 2022 with FTX. And that wipeout pales in comparison to what happened on October 10th. But in 2022, it took 8 weeks before crypto, the smoke cleared, the leverage wipeout was enough in the mirror that crypto prices began to recover. This week is the 8th week since that crisis. And I think crypto prices are beginning to actually recover. That's why I think Bitcoin can can double from here by the end of January. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle.
I don't think that is going to happen. All right,
Yeah.
so that was mine. I'm not going to say a doubling is going to happen in January. That would be almost a $200,000 Bitcoin by end of January. So, I mean, do we break the all-time high? Maybe that's a shot at it with good narratives, clarity, proving out that inflation is really happening. Maybe more rumblings at the Fed that we get another rate drop in January. Maybe those kind of things could indicate it, but I just don't know. What is your opinion right now? Do you agree with Tom, or do you feel like it's a longer cycle?
I agree with the heartbeat that Tom Lee is coming at it with.
Okay.
October 10th was rough. There's two things I disagree with Tom Lee about in this clip. Number one, right on the nose, Bitcoin doubling by the end of January, as you disagreed in the clip that you responded to it. I'm on your page there. Too fast, too soon. Could one of the altcoins double in price? Like, could I see Ethereum get to 5,000, a little over 5,000? Sure. But Bitcoin to, let's go right now, $190,000 by the end of January. That's too much, too fast. But I agree with the heartbeat of a recovery should be coming. The other thing I disagree with him on, and I want to move back, and we mentioned it here on this show, but he said, well, actually, crypto was having quite a good year until October 10th. It was having a better year than it is right now, but it was not having a good year. Like we go back and look at, when you look at 2021, when you look at 2017, when you look at 2013,
not even a comparison. Yeah.
These are major bullish year candles. And let's just pretend we were still at 126,000 right now with Bitcoin. Let's pretend Ethereum was still over 4,000 per coin. That is still, if you were to look at those candles, it would still not be impressive. It's one of the reasons why, people, there's a guy that comments on my show every day. We love the comment section. There's a guy that says clown shoe. I'm sure he was meaning to say clown show. And he likes to reference price predictions that I've made way back at the beginning of the year about some high levels some of these altcoins could have gotten to by the end of 2025. Well, guess what? The same people calling me a clown for these outlandish predictions, but they want to hold on to the 4-year cycle. If the 4-year cycle was still intact, my price predictions would have come true because this was supposed to be the biggest, most bullish year for the crypto markets, and we didn't even get close. Yeah. Which means everything has changed. We are playing a different game right now. It makes it in some ways more challenging, but that's why it goes back to a question I asked earlier. I'm not as interested right now, Paul, in looking at former Bitcoin charts and former altcoin charts. I want to look at them. I want to take them into consideration. I think it's a whole lot more interesting right now to go back and say, what did gold look like after gold received its ETF? What did the emerging computer technology world look like after mass adoption of computers? That's what we're talking about right now with crypto. I think crypto's history is less relevant than those other things.
Yeah, the narrative has started to shift dramatically. It's the news cycle. Obviously, data is being pushed now into the markets, and this is how Wall Street responds all the time. Yeah. This is not something new for Wall Street. So it's just different because in the past, crypto has responded by cycles and charts, and because that's what the market was essentially allowing it to do. Once you enter the game of Wall Street, it no longer does that. I mean, it has a certain amount of cycles and charts, but it's really about narrative performance, how Wall Street perceives the market to be. We also have to look at perceptions of this right here. This is the Bank of Japan monetary policy meeting concludes tonight. This, of course, will convert to approximately 9:45 tonight. We'll know. Big question for crypto: is the expected rate hike baked in? So here's my question. Yeah. We're gonna answer the poll, our own poll here today. What do you think? Yes, we bottomed, quick dip, then all-time high, or the bear market is here. Which one would you choose?
Oh man,
bottom, dip, all-time high. Or
my answer is I don't know. I want to hear what happens, but I'm going to lean towards no, quick dip, then all-time high. It would be my middle. Right. I'd go with the middle answer there.
Let's go there and see if, there you go. You agreed with the audience.
That's not good, Paul. It's not good. It is not good when I line up with the masses. That's not a good thing. I like being in the minority. So, yeah.
Well, it's the good thing is I think I felt like I would have gone, we've bottomed. Just to go against
that was
the grain.
closer to the bottom. That was closer to the minority. But
right.
here's the thing: is this going to happen tonight? And clearly, the Bank of Japan is a little bit different than the FOMC, right? They don't have an exact time they announce it. They don't always have a press conference, although especially when they usually. Guess what I understood in my research. Someone might correct me on this. When they don't do anything, when they pause rates, there's no press conference. But when they raise or cut rates, they usually have a press conference. Their governor comes out and speaks. And just like we talk about here in the United States, the rate decision is important from the FOMC, but what's even more important is Jerome Powell's presence at the press conference. Is he hawkish? Yeah. Is he dovish? Does he give us hope that things are getting better in the future? Or does he say things like he has been recently? We have to keep reviewing the data. We have to keep reviewing the data. That's going to be important tonight. The governor of Japan, he'll be speaking in Japanese, so I'll have to listen to a translation of it. Does he come out, Paul, and does he say, we are so glad about where we are as an economy. This is the last rate hike. We're going to be in such a strong position. If that comes out, a dovish approach, I think the bottom's in. I think we start to move to the upside. But if he gives us a Jerome Powell-esque, don't know what the future holds, we have to review the data.
Yeah.
That to me would only be a nail in the coffin. The bottom is not in.
Okay. All right. I like your analysis there. We'll be waiting on bated breath here tonight, December 18th. We'll get that decision. We already know it's coming in. The question is, to your point, how do they look at it going in the forward-looking statements? Ethereum is down 42%, man, from all-time high. This is where this is the question everybody's asking: is the ETH bottom now, or are we potentially going to see a lower ETH? When you look at the chart on Ethereum right now, is this the time to buy Ethereum at, what are we, 2,700?
Yeah, we're at 2840 right now. Yes, here's the question. Here's going to be the question. And tonight's going to play a big role in this. This is what I have at the moment. You can clearly see Ethereum is in a uptrending level of support at the moment. Right? If I were to zoom in nice and close here, uptrending level support. So either the support level got hit and we're good here around the golden pocket level of Fibonacci. If it does not hold, though, if we lose this trend line, I don't think it's as simple as just double bottoming back at 2,600. If we lose this, I will be looking for a move closer to 2,500 per coin, into the platinum pocket on Fibonacci, into a zone of some high support right here. I think also if you were to use fixed range volume, this is going to be another key factor here as well. That's going to be our point of control. Right, this is where the most amount of volume since the lows back in April has been. That seems like a strong, if the support level you're currently holding doesn't hold, $2,500 area for me is the next spot to watch for a bottom on Ethereum.
There you go. All right, so if you guys are dollar cost averaging in many places, I think, like myself, Ethereum is a long-term play. Sure, you can take profits. It's, over this last little bit, maybe you have. Considering the long-term play, though, I think is going to be the picture to watch out right now, especially with these big asset classes, including, if you think about it, XRP dropped down to 186. If you looked at XRP right now, do you feel like it has another leg down where we could go in and snap some of that up?
Yeah, good question. When it comes to XRP, I don't see XRP taking a different route than Bitcoin and Ethereum. I think right now it's very important to understand what the two big ones are doing. And unless there's something crazy fundamentally going on with a different coin, you're looking at a similar trajectory. When I look at the XRP chart, you have this former resistance level from back on the highs in January of 25. We broke through this. This was a major bullish move here, but it was cut short. It should have gone a lot higher, but that's what we've kind of discussed throughout the show. This was a disappointing crypto year. I think you could see a revisit of this line. I think you could, again, keyword could, revisit levels closer towards 160. Doesn't mean it will happen. Again, if we get some good news tonight / tomorrow morning, there is a chance, and that's the keyword chance, the bottom is in. You asked me earlier how I kind of view the markets right now. I'm extremely long-term bullish, but I'm defensive, and I'm not convinced for sure the bottom's in. So I have some buy orders at lower levels for a lot of my favorite cryptos. And some people are calling me bearish, and some people saying, Tim, why'd you flip? I'm just trying to be as realistic as possible. I've gotten things wrong in the past. That doesn't affect my future. I'm going to continue to evaluate the charts, evaluate the news, and change my thoughts on the markets as things develop. Right now, tonight will be a pivotal moment. I still could see, though, 160 to 150 on XRP. If you're a big XRP lover, that's great news. Buy it cheap. Have some buy orders in preparation.
All right, I like it. Let's go on to Uniswap. Here's Hayden Adams talking about just submitted the unification proposal. This is for final governance. This is going to be where they're going to be sharing yields back into the ecosystem. If it passes after 2 days, the time lock, 100 million Uniswap will be burned. So this is bullish if you're looking at Uniswap as a whole. But if you look at the chart for Uniswap, it has struggled dramatically here recently.
Yeah.
Where would you put this one right now? The vote is supposed to happen before Christmas or end up on... I like that. Hayden's always fun to listen to. Where would you put Uniswap, though, in the near term and long term? Is this one of those you're looking forward? Would it be an altcoin you would stick with?
You know, it wouldn't be one that I'd put in my high convicted plays. I do think there's a future for Uniswap. I think especially on the retail front. As far as how interested the institutions are in it, into it, you know, there's an ETF filing, so that's a good sign.
Yep.
But I don't know. You don't hear rumblings of banks and large investment firms talking a whole lot about Uniswap. That being said, there's something about this chart that I just told you on the last one. Look for something different to happen. This is clear. Like, this is a pretty clear demarcation of support that we just bounced off of again. Yes, we have a couple of candles on daily charts. Let's go to the weekly chart here to kind of actually give it a. We have a couple of candles since the bear market ended back in 2022 that have come below this level. But look at this support level that started back here in May of 2022. Look how many bounces we have on it. Even times we lost it, this was an area of rejection. So there's something about $4.78 range on Uniswap that is a very, very big buy or sell place. And with a recent bounce on this again, this could be one of those that the institutions, like I just said, don't really have their teeth sunk into, so they're not manipulating as much. So retail is kind of bottomed out here several times, and retail is the decider of, hey, do we bounce here or not? The less institutions have their hands on you, the more likely you are into having your bottom in. It's the ones that institutions have sunk their teeth into that could go a little lower.
Okay, all right. Well, and it's interesting because we're now talking about institutions. Obviously, the challenge right now in DC is that the banks are going head to head with the crypto markets, mainly because of DeFi privacy, you know, issuance on stable coins, how we're going to deal with yields, all that. The good thing is that all of this is front and center for sure. So both in Wall Street, DC, which only to me looks long-term bullish. And I think for many of you guys watching right now, you may be looking at this much like stocks, because many people are worried about, are we in an AI bubble? Could we see NVIDIA fall? Especially if you look at some of the most recent departures of funding that's going into some of these data centers. So there's a lot still on the ground around decisions being made that will affect 2026 for sure. Tim,
Absolutely.
Thanks so much for coming in today. We appreciate you stopping by.
Yeah, thanks for having me, Paul.
You bet. All right, so you guys know what to do. Make sure and jump into our own private member group. That's the Bear and Market Edge. You can join over just by visiting our website or the link down below. It's going to take you here, and you're going to get in, enter. You get a whole slew of things, deep level research. We also do some sentiment and trend analysis there, stuff that we don't necessarily do here on the show all the time. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.